Welcome back, everyone. It's June 22nd, 2020. I'm JerryVHall, and here's the view from Costa Rica. Now, as I have Coin Pavrika up on the screen, I want to draw your attention to this incredible $272 billion market cap for our entire crypto industry, right? That's the whole asset class. Well, today's video is really all about this frustration with the XRP price. Now, that's only like a topic. The real deal here is, are you preparing yourself to become a crypto billionaire? That's the real focus of today's video. So I want to take you through my story through a series of screenshots. So here we have a historical look. This is a snapshot of February 5th, 2017. As you can see, the market cap is very close to where we are today. And that beloved XRP price was sitting at 0.006442. Now, when I came into the market in February of 2018, you can see here the market cap sitting at whoa, look at that, 269 billion. And XRP's price was sitting at 81 cents. Now, I had made my first purchase before February 4th at $1.08. Why this is relevant to understand is that my starting point looked at a historical view dating back a year, and obviously having heard about the explosive growth through the December 2017 parabolic bull run that captured the entire world's imagination for like 30 seconds. So I'm in the market February of 2018, and I'm dollar cost averaging in over the course of 5-6 months. Now, looking here at February of 2019, obviously I was fully vested, completely out of the equity market, 100% into this digital asset space, and 95% of my assets sitting in XRP. And XRP's price is at 30 cents. Yes, I was frustrated. Yes, I had expectations that with all of the incredible news about the infrastructure being built, the partnerships that Ripple was making, the, let's call it, exposure to the existing capital markets, these would all be things that would drive the price in my thinking. But lo and behold, here we were at February 2019 at 30 cents. Now, my conviction for a long-term hold had not changed. Matter of fact, it was only growing stronger by the day. However, it is frustrating when you have X amount of dollars put into a market and your valuation for the total of your assets is cut in half. That's not a great place to be. However, continuing to follow the market and watch the infrastructure being built, I could take solace in the fact that this new market needed to develop and mature, and all of the right things were being done. Partnerships were being signed. At this particular time in February, ODL was live. Customers were starting to use ODL in actual payment flows. Fast forward here to February of 2020, a look at the overall market cap of 269 billion, and XRP is down 5 cents over the course of the year, where the infrastructure was only getting stronger and stronger and stronger. All the actual value fundamentals were getting stronger, yet the price was going down. It's a head scratcher. What the heck is going on with this thing? But I remain true. My course of study has led me to look at history, other innovative technologies, as I've mentioned in previous videos, the adoption from analog landline telephones to the incredible technology of wireless data and cellular technology. Everybody now has a computer in their pocket. It took time for that to happen. Also, taking a look at the history of the internet. I think it's really important that we understand history, that we understand adoption curves, that we understand fundamental innovation doesn't always equal immediate market valuation. These are things that are very, very important to understand. I have this Lombardi letter up. I encourage each and every one of you to go find this article, read this article, understand what it's trying to tell you. I want to draw your attention to this particular timeline, the dot-com bubble timeline. Back in 1989, NASDAQ rang the bell at a 378, which is a metric to kind of show the value of the overall NASDAQ market. And as you can see, companies right here, AOL is launching on the New York Stock Exchange. 1990, you have the first search engine, Archie, is developed by McGill University student Alan Emtage. 1992, look at that, NASDAQ up to 580. Now, keep in mind, NASDAQ's kind of where a tremendous amount of the tech stocks go to sell their wares, trade their stock, etc. 1994, NASDAQ is up to 777.29. The first online order is placed, a large pepperoni pizza, mushroom, and extra cheese from Pizza Hut. Yahoo is created. 1995, Craigslist, eBay, Match.com, MSN are all now available. You got Netscape hitting the scene. You got 1996, eToys.com is founded. 1997, Pets.com goes online. And Amazon.com's initial public offering takes place in May 15th of that year with a share price of $18 per share. Wow. Anyway, you can see that what I'm trying to get here is if you go through and take a look at this timeline for the what we would call the dot-com boom, you can see as it started to get some momentum, that flywheel effect happened, and now all of a sudden, I mean, heck, you got Pets.com raising $82.5 million for its IPO. I mean, it's just staggering. What all this that I'm trying to draw your attention to is simply one basic tenet that time and time again through every innovation adoption cycle that goes to market is this one underlying factor, and it's what I'm counting on. And I think whether you consciously know it or not, you're counting on it also. But before I get to that buzz term, I need to draw your attention to this. These are value accelerators. Now, investor sentiment is huge, but what's really important for long-term valuation is pace of innovation and pace of adoption. And they all feed each other. Now, in the crypto markets, investor sentiment is very low. It really is. I've described in previous videos, you can see the engagement from communities on Telegraph, the number of tweets, the Facebook interaction for a lot of these cryptocurrencies is down year over year. And that's okay. That's all right. Because guess who is going to come to the rescue? Wall Street is going to come to the rescue, folks. That's right. I want to draw your attention to a couple goodies here. Not too long ago, but long enough that it's kind of like, what's going on? You know, I remember the Eris X company being formed. saying they've got a cryptocurrency trading solution coming to the world, but I haven't heard a whole lot about them since. I knew that there was a big investment from TD Ameritrade, and one of the things I envisioned was that I'd be able to log into my TD Ameritrade account and start trading cryptos. Well, that's not true. But I did tweet to ErisX the other day, and they replied, "Hey, Jerry, we are live and open for spot as well as regulated futures trading on cryptocurrencies. You can onboard as a direct member or go through one of our live intermediaries." Well, I've decided that I'm going to open an ErisX account. It's in the process of having my identification verified, but I will go to that. I want further explanation from them. What is it? What is this intermediary, right? Live intermediaries. What is a live intermediary? So let me reply to them right now. There we go. Let's see what they respond with. I do go to TD Ameritrade, and I noticed this was an old like announcement from them, right? I'll get rid of this so you can't see it, or so you can see it. I have yet to be able to log into my TD Ameritrade and actually trade for XRP or Cardano or VET or even Bitcoin outside of the digital currency groups GBTC, which, I mean, you pay such a high premium for that sucker that at this point I'm not really interested. Now, keep in mind, not too long ago, we were made aware that Charles Schwab is actually purchasing TD Ameritrade. So when that time comes, I look forward to being able to log into my Schwab account and make all of this happen. It's pretty exciting stuff, right? With the advent of your payer ID, making crypto wallet addresses and destinations as simple as remembering JerryVHall $@ charlesschwab.com or JerryVHall $@ tdameritrade.com or what have you. This is going to open up that adoption element. Global ID is going to take care of your KYC, AML, and what is it? Counter-terrorism financing. So it's CTF regulations, very huge and very important when moving over $1,000. So when I go back and take a look at these value accelerators, and I can recognize that today investor sentiment is down. Okay, great. I acknowledge that. However, pace of innovation is just staggering. The pace of innovation is unquestionably marching ahead at a feverish pace, and I am excited about that. And when I take a look at what pace of adoption is, yes, it's slow now. I acknowledge that. But I see all these fundamental elements coming into place that will accelerate this pace of adoption. Now, when pace of adoption picks up, does sentiment from investors pick up? I would venture to say yes. And I see a snowball effect happening. I see that quote unquote flywheel theory kicking into gear. So I want to leave you with this. This is the playing field, folks. Whatever anybody tells you, when you're thinking playing field, you need to be thinking about the global capital markets. That's the playing field. We're not playing in that yet, really. But this is why I'm so bullish. I'm bullish because I absolutely 100% believe that the greed of Wall Street is insatiable. Why do I say that? Well, if you look at the global traditional markets, there are about 550 million investors. Now, keep in mind the International Continental Exchange, which happens to own the New York Stock Exchange, also owns 6 other stock exchanges around the world. They are the numero uno as it pertains to public company stock availability for the globe. No entity on the planet offers more access or greater access to publicly traded companies than ICE subsidiaries. And we know that they launched back. Has that done a lot for us in the year that it's been live? No, not really. But the floodgates haven't really opened yet, have they? Keep in mind that only 35 million people are currently invested in crypto. Now, Wall Street sees this and frames this as there are 515 million new customers to approach with crypto products. That's right. What does Wall Street see here? Number one, the massive wave of human capital entering and has entered and will continue to enter this digital asset space. We're talking the finest engineering minds, business administration, i.e. your Brad Garlinghouses, etc. Your finance guys. Already in the game are your Mike Novogratz and Barry Silberts. And in a very quick order, you're going to see Goldman Sachs. You're going to see State Street. You're going to see BlackRock. You're going to see these monster entities, right? They see staggering profits from these crypto only startups, your Binances, your Coinbases, who are making north of $1 billion a year in profit. That's not the revenue, that's the profit. And their current market is 35 billion users. And they see an addressable market of 550? Come on. They also are very aware that the investor demographic is changing. That's right. The baby boomers are exiting the capital markets to secure the enough liquidity and solvency to get them through the rest of their life. So as those baby boomers exit and the millennials enter, the millennial mindset is digital. Yes, that's right. And also keep in mind that Wall Street sees that there could be 5 products per customer. Each customer, they could probably sell 5 different things to. ETFs, mutual funds, their 401ks and their IRAs, not to mention, as a consultant managing a portfolio, you get paid when you go through rebalancing processes. So every 3, 6, and 12 months, depending upon what the client wants and needs are, they're getting a fee to maximize your allocations in different asset classes. Now, who's going to really profit going forward from this, folks? The toll collectors, absolutely. Those Goldman Sachs's and JP Morgans and Morgan Stanleys and all these people that manage large sums of money for others. They take fees for this. Management fees, success fees, because I woke up in the morning fee. I'm going to take an hour-long lunch, therefore I'm going to charge a fee. That's right. Go through the fine print. You will find 5, 6, 7, 8, 9, 10 different fees associated to any one of these ETF, mutual funds, 401ks, IRAs, etc. The traders will profit. Volatility, man. There's money in volatility. Don't think that the traders won't be profiting. They will be. Businesses that add value, right? These businesses that are building value, they will profit. Not to mention a poop load of us, investors, who sell at 100%, 200%, 500% gains. Those are the people that will profit. Let's take you down to this. Who will generate or create generational wealth? Well, the big money investors, those that have put in millions, are expecting to get billions/trillions out. Founders of adopted tech, your Chris Larsons, your Charles Hoskinsons, these guys will be generating in creating generational wealth. But also the Jerry Halls of the world, guys that are going to take capital from their investments and seek vehicles that pay them to own them. That's right, using principles that I talk about all the time in this channel about compounding interest, understanding capital management. If I have an asset that's paying me to hold it, and it pays me, let's say, 7% a year, and I only take 6% a year to live off of, that means my principal plus 1% a year is compounding. That principal will grow. As the principal grows, I can increase my allocation, but as long as I'm taking less than it generates, then I'm building. And that's what this is all about, building wealth. Folks, educate yourself, prepare yourself, and then execute when your plan presents itself. When the pieces of your puzzle are in front of you, execute. Don't get all, I'm going to wait I'm going to wait for 5 more cents. I'm going to wait for 10 more cents. Markets are irrational. Remember that. But if you have a plan and it's well thought out and you've executed on that plan, you will produce the desired results. This isn't rocket science. Everything you need to attain your goals is available to you for free. You just need to put in the work. That's the truth. That's how I see it from Costa Rica. And until next time, everybody, Pura Vida.